Why the hell has Bitcoin been down and to the right, chopping sideways for the last 9 months? We have an answer for you, and that person giving that answer is going to be our special guest today. Mark Yusko from Morgan Creek Capital is going to be joining us. We also have Magic Internet Money breaking down the Bitcoin chart. We have some altcoin news to share with you. Why Aptos and Avalanche should be on your radar. We have some news coming out of Chainlink as their conference is next weekend. What big news are we going to get out of the Chainlink camp? I believe Chainlink is one of the few cryptocurrencies that is currently up on the 24-hour, sitting at over $12. We'll talk about that and much, much more on today's episode of Sin City Crypto. Let's go.
Hola! It's your boy Big Rob back in the house. Welcome to Sin City Crypto, home of entertaining content. Unlike other boring channels, where they take that same regurgitated stale information, we give you a very unique perspective. We don't BS around here. We don't fluff it up. Bring the heat. And we do it in style. Now, you said you're down and to the right? I'm sorry for you. All right, so anyways.
Wait, what?
What?
No, what'd you say?
Bitcoin charts down to the right.
You said I'm down and to the right?
Yeah.
Oh, okay. If you're going to talk shit, at least, be man enough to say it to my face,
Down and to the chart's down to the right,
Actually,
bro.
to the
I mean,
left.
it's disappointing.
Actually, to the left.
Like your boy, it's always straight up, So.
Yeah. It's the only thing straight.
All right.
Now,
Rocco, what's up, bro? How you doing today?
Yeah, doing fantastic.
Yeah,
With
you
the
doing
cameras,
good?
I don't-
Good. Look good, man. Look good. Look like you're hunting. Doesn't Rocco look like he's hunting Bitcoin? Look at that. Like he's
hunting Bitcoin.
He is hunting Bitcoin like he's hiding in a tree.
Let me fix the camera.
I don't even know what that means. Like
He's
he's wearing
got,
camo?
Yeah, he's got the forest camo with the Bitcoin hat. So hunting
Fair
Bitcoin,
Hunting Rocco. Rocco the Hunter.
Yeah.
Wow. Okay.
Wow.
Bitcoin Hunter, yeah.
Let's start with this video. This is from Paul Tudor Jones.
Inflation? I saw that.
Did you on Squawk Box?
Mm-hmm.
Let's take a listen here. Pretty interesting. Also, RustyBot said the laser eye is supposed to itch. Potentially, yes.
Are you off buying gold and Bitcoin and
I think
hiding somewhere?
all roads lead to inflation. We're going to end up
But does all roads lead to inflation? Therefore, gold is a good investment. Is Bitcoin a good investment to you?
I'm long gold. I'm long Bitcoin. I think commodities are so ridiculously underowned. So I'm long commodities. I think most young people find their inflation hedges via the NASDAQ. That's also been great. It's probably some combination. I probably have some basket of gold, Bitcoin, commodities, and NASDAQ, something like that. And I would own zero fixed income. If I had my cash, it'd be very short term. The playbook to get out of this, you see it in Japan right now. They have 2% inflation, 30 basis points overnight. They don't want to raise rates. The playbook to get out of this is that you inflate your way out and you have a small tax on the consumer and you run interest rates and nominal growth rate, interest rates below inflation and nominal growth above inflation. And that's how you reduce your debt to GDP. So you're going to have the Fed they should be easy. They should be
easy. You want them to cut.
So just real quickly, every 100 basis points, given where our debt to GDP right now, every 100 basis points is worth about $90 billion a year to the deficit. $90 billion. Wow. So yes, if we're trying to stabilize debt to GDP, we want to run the most dovish monetary policy that we can without letting inflation become too much of a tax on the citizenry. So yes, all roads lead to inflation. That's historically the way every civilization has gotten out, is they've inflated away their debts.
Now that is one of the most successful, call it investors, in the entire world. And a lot of people point to Paul Tudor Jones and say, hey, after his Bitcoin thesis back in 2020, that's really when the market started to turn. I'm not saying that he's the reason for the bull market, but any thoughts on what Mr. Paul Tudor Jones had to say?
It's funny that the smartest people in TradFi, the old money, same premise that we have in crypto, right? And the premise is, hey, make your money, get your wealth. You're spending, get your spending cash. Keep what you can in liquid assets to get by, to cover bills, a little bit to fall back on. Nothing wrong with having a checking account, even a savings account. I don't have a savings account, but anyway, nothing wrong with having a savings account, a couple $1,000s there, or whatever your buffer zone is, to soften the blow for any unseen financial situations. Then everything after that should be allocated to assets, commodities, and even baskets of stocks, whatever your flavor is, that protects you against inflation. Because if you have 20, 30, 150, $500,000, $2 million sitting in any kind of liquid cash, even some old school bonds, you're losing money, right? You're essentially just being taxed, as he said, through inflation, and you're losing money. And if anything, reverse that trend, catch the wave of inflation, and make your money work for you. And so this is just kind of like the golden principles that we've heard before, even before crypto's around, was, hey, make your money work for you, right? You want to increase your net worth, or at least increase your productivity to where you make enough money to make ends meet, and then you have that surplus where you can take that capital and then
Put it into meme coins.
multiply it, right? And so, the largest multiplier, is crypto at the time, right? I mean, I'm sure you could go on to some extremely risky stocks, but I mean, this is our area of expertise, spare capital, wise investments, not investment advice, of course, but, picking sound projects, getting exposure to those, you're going to get a larger return. And this is obviously a new financial sector, and we know how much money is in finance just generally. I mean, into the hundreds of trillions of dollars, globally for every single thing that finance touches. And so the market share is going to get at least dispersed over to crypto in some form. And so, today's theme of the show is dollar versus crypto. And it's not that the two are going head to head. It's just a realization that, like, hey, no, this is accelerating. And as Paul Tudor Jones said, you know what? Inflation, especially you listen to, listen to Kamala Harris. You listen to, what she's campaigning on.
I can't listen to her.
Well, what she's campaigning on, every single thing that she's campaigning on that she says she's going to do involves giving out large sums of money. Small businesses, first-time small business, $25,000 or $30,000, or maybe $50,000. I don't remember. It's $50,000. Yeah, so $50,000 there. First-time home buyers, $25,000. Yeah. Then you have cancel student loan debt. You also have
raising taxes.
Raising taxes, and then you have just the handout of money to foreign nations through financial aid and military assistance. And so it's expediting. And the reality of it is that it's still going to carry on with Trump. It's not like inflation is going to reverse and we're going to be deflationary with Trump. It doesn't matter who gets in office. The political structure, the fiat system right now is that we don't bring in enough money to cover debts. Interest payments are going to shortly, in the short-term future, surpass how much money we bring in. We're just going to be taxing you just to repay debts. And then, hey, also taxing you through inflation by printing money and handing it out to various projects. And so it's just, sometimes you just need an awakening. Sometimes you just need a reminder that, hey, everything is broken when it comes to finance, and it's getting worse because there's more leverage in the system and there's more agenda to hand out money to get reelected by politicians, not just the executive branch, but also through Congress. And so, you're in a small minority here, you watching, and in the small minority, you realize that, hey, this cash thing, this fiat thing, it's not working. And I'm sure we all got into this to make some short-term gains. At least that's what I did. I was like, hey man, there's a lot of money to be made here in crypto. Then you start realizing through research and, kind of being plugged in that, the system sucks. So even if you don't like crypto, I'd encourage you to onboard friends and family, at least to hedge themselves against fiat, at least how Paul Tudor Jones says, if you're not comfortable getting into Bitcoin, at least get into some commodities and stocks. And the days of saving till retirement where you just have $100,000 or $500,000 in a savings account so that way you can retire, that's asinine now because it's not going to last long. $500,000 will last, 8 years in retirement? Something like that?
Not even. Depending on when you're going to.
Yeah. I mean, think about that. If you were in 2000,
then the number's closer to 3 million.
let's just say it was year 2001, for example, and you had $500,000 in a savings account, you could probably comfortably retire with some reasonable spending. In 2000, a good, make it 25 years, right? If you had your house paid off, for example, you had $500,000 and, you just kind of, spent the next 35 years just kind of coasting.
That's crazy to say this, but $500,000 isn't even that much money.
That's
if you think about it.
Yeah.
Right? That's
8
a house
years, bro.
that's a house and a car.
I would say 8 years, you'd probably last. If you had your house paid off, I think $500,000 would probably last you about 8 years. What do you think? Over under 8 years, $500,000.
Depends. Are
You, a wife, and not working, either one of you.
I mean, is my wife bougie? She like to travel? Does she like expensive handbags? I think these are all important questions.
What wife isn't bougie? And I don't mean
My wife is
I don't mean like Gucci bougie, but I mean a wife got to eat, bro. You know what I mean? She can't be going out there all looking all raggedy. So you gotta pamper that woman. Gotta get her nails done. You can't be having your girl out there with split ends, busted up nails.
Yeah.
Bad looking teeth. You gotta take care of that woman.
Rob, let's take a look at the markets real quick.
You want to talk about women no more?
I want to talk about my wife might be one.
All right, well, the wife's very very well put together. So you did good there. So Bitcoin sitting at $67,283, and so little bit lower than we were yesterday. And so I feel like we're at this support level of 66, or basically $67,000 flat. And so for me, I am I'm a little worried. We're a little worried about going into this next weekend. I think this is a pivotal moment. I know everyone is counting on October to take us to that $70,000 mark, but could be invalidated. I am still on the camp. I still wholeheartedly believe that we'll end this month at that 72 over new all-time highs. I think we'll have a big rally and push on the back end of the month. But you know what? It's only a little over a week to go. So if we are not above, say, 69,000 by this weekend, then, that leaves us like 4 or 5 days to get to 70K. And so the time is running out. And so for me, I don't know. I'm not too sure. I mean, David, what do you think about Bitcoin? Because today's the 22nd, right? We're supposed to have October. We've discussed it multiple times. We do expect
We've had our October. October's been we started October at $62,000, and we're at 67.
But that's okay. Where
I was expecting.
Yeah,
I am still expecting more. Okay.
So back to my premise. If this weekend we're not at 69,000, do we break all-time highs by the end of the month? Because this weekend will put us at about the 26th and 27th. There's only 3 days left. So, I mean, just not enough time, right? Time's running out if we want to close the month out with new all-time highs. Now,
we both know how quickly Bitcoin moves.
It does, but still.
And how leveraged the Bitcoin markets are.
Yeah.
All it takes is a wick up to 70.5K, and you get like $8 billion worth of shorts being liquidated.
But I'm just saying that Friday's the 25th. Monday's the 28th. So if we come in Monday morning to do the show, there's only 3 days left in October. So I mean, we're not over 69,000 by the end of the weekend. All-time highs we're not gonna break that.
What do you think is more likely to happen?
I think in the next 48 hours, if we don't make a move, we're not breaking all-time highs. I don't even think we break 70,000. Really? If in the next 48 hours, just because of the time, man. 48 hours give us just a week left in October.
Yeah. I mean, we're at 67.2. So,
And we went down and touched 66.9
Yeah.
3 times this morning.
Yeah.
So that's where I'm getting at it. I feel like, we keep bumping up against the support there. And, we've been below 66 multiple times. So I'm kind of concerned that that support is getting tested. And if might not bode well. Taking a look at the altcoins. So you have PopCat up leading the charge for the top 100, up 9% on the day. Radium up 7%, Beam up 6%, Uniswap up 6%. But taking a look at the biggest gainers for the week, it was up basically 100% was ApeCoin. Outside of the top 100 earlier in the month, last week. Now massive move, but a little retracement, but still up 75%. So, what does that say for the ApeCoin ecosystem? Is the days of NFTs and Bored Ape Yacht Club being the premier go-to NFT? I think we might be smelling a little comeback on ApeCoin. I haven't bought into the metaverse thing with them. It looks awful, I'll be honest with you. And perhaps the developers have been in the background working on the ApeCoin ecosystem and at least the metaverse, but I haven't seen anything that looks even remotely fun to play from their gaming and Web3 side. So what I would like to see from ApeCoin, what I like to see from Yuga Labs is to come back to the former glory that was their NFT heyday, right? And so I feel like they might have spread out their assets a little too thin, right? I think they diversified too much. They did the Kennel Club, the Mutant Apes. They did the Metaverse.
Don't forget Dookie Dash.
The Dookie Dash, horrific game.
And now they have a new chain, Ape Chain.
Yeah, they got the ape. It just feels like. So if you're here in the United States and you know anything about football, they used to have Monday Night Football. It was the biggest game or one of the biggest TV ratings. Period. Then they had Thursday Night Football, Sunday Night Football, 2 games on Monday, and then they did a Friday game, and then every once in a while they do a Wednesday game, Thursday. Anyway, now they overdid it, man. They just saturated the market over and over again with more and more products, and then what do you know? Monday Night Football, not that impressive anymore on ratings. I mean, it's still solid, but
That's actually a good point.
and so that's how I look at ApeCoin. I think that they might have just went too diversified and kind of
Kinda like what Polygon did, right?
diluted the product.
Kind of like what Polygon did. ZK, layer 1, layer 2, layer 5, layer 6.
They're just
And they're an aggregated
improving.
layer. And then
That's a terrible analogy.
whatever.
Terrible.
We have a Magic and Money joining us. I'm curious to get his thoughts on the price action of BTC. Will we get a new all-time high by the end of October, as I've kind of said? And so if you've been with us, every Tuesday, Magic joins us. And well, today is Tuesday, and Magic is joining us. Magic, welcome back to the show, brother.
We're ready for Magic whenever he is.
Magic, I'm hoping you bring some magic on today's show. 67.2. I thought last week when we were getting up to that 70K, I was like, all right, this is it. And it's just what's happening, man? What are your thoughts on this price action? And do you think we're gonna end October over $70,000? Is the chart telling you we are?
I think there's a pretty good chance, and that the odds of it happening will be basically determined off some very simple levels. So I'll pull up the chart because I know we're on a time crunch today, and we'll bang it out real fast. In terms of what we have going on, you've got a few supports that are pretty key. You want to pay attention to the August high, right around 65,592. You got a little zone here with a biweekly pivot, so the average of price for the past 2 weeks. This is also going to be where your new monthly pivot's going to generate. The average of price for this current month when it does close is represented here. It'll obviously change based on what price does in the next 9 days, but it's not going to change a ton unless there's a really big move. So as long as you're living above this area in the short term, the pressure to come up to this 70K zone is definitely on. The moment you lose this, though, it's not the end of the rally necessarily. You can see from basic market structure that it would still be higher lows in place, and you could see a small golden pocket retrace to where the quarter open is. And simultaneously with that new monthly average that's going to generate that horizontal, you will have a 60-day average as well. Hit rates on those are in the low to mid 70 percentile. So, we know that it's more than likely it's going to happen. It doesn't have to, but in this instance, it would be nothing more than a mean reversion and a higher low still. So you do want to see price kind of hold itself here if we're going to see that push to 70K in the short term. But even if it does retrace to these levels, as long as they're holding, pressure's still onto the upside and things are looking just fine.
Yeah, I was thinking the October might be invalidated if by this weekend we aren't above, I would say 68,000, just because of how many days are left. Monday will be the 28th, which basically only have 3 days of next week that to finish off October, and so I just think that getting above that 70K range would be quite difficult if we don't make a move here in the short term. And a lot of people are expecting that big green print on the end of the month, but perhaps the print is only 5 or 10%, and I know a lot of us are expecting that 20 to 30 for October.
Perhaps the prints are only coming from the Treasury Department.
That is for sure.
What I will say is that we kind of went over this a while back historically on the quarterly chart. If you recall, we don't really see too many small quarters in terms of percentage. And we did see that recently. So we saw percentages of, I think the average for an up candle that is a quarterly candle is over 100%. And if it's a down candle, it's actually only 43%. Anytime we see those under 50% each, two consecutive ones, it has resulted in Bitcoin moving at least 60% in the next quarter. And you can see we had 22% to the downside and only 43 to the upside in the past 2 quarters. So we would expect this to probably give us something a little more. And I did kind of do some homework, and we probably don't have time today to go over it. But if you were to look at how the moves start versus where they finish in those quarters where the expansion does take place, generally you don't see the entire move in that first month. It does kind of get going though. And so what you would want to note is the start of this quarter, which we'll use a nice yellow line to signify it, go to the daily, and you can see that it is starting off just like all the other quarters in the past that had done so when you get that expansion. Now, if it expands to the downside, 43% from here is like 40K, right? It's not ideal. So we do want to see this quarterly open, quarter 4 open. That is kind of the line in the sand for me for the October to get that move going. If this starts to fail, I do kind of revert all the way back to what we talked about over here, though, where I said, man, this looks very similar, and it would be a very, I wouldn't say damning, but it wouldn't look good to come back to this quarterly region. And I'll get rid of these so it's easier for people at home to see. It's also your current monthly open, but you can see why you don't really want to be coming down here and losing this area, especially by the end of October. That would be, it would look bad. So that to me is kind of the line in the sand still between 63 and 65K. And until then, I'm not too much into October or whatever it may be. I still have my timeline for middle to end of November for a significant high in Bitcoin if it's going to get that new all-time high. So,
but there is there's a lot of certainties with October. 1, I'm going to eat too much candy. 2, I'm going to spend too much money on a Halloween party I do annually. And then 3 is my portfolio is supposed to be massively in the green. Don't lie to me, Magic. So
we've been fooled.
I do want to say though, yesterday, I'm going to fill you in. Yesterday, I came in hyper bullish on Avalanche. Why? Well, 1 was because of the new game they have, Off the Grid, which is catching a lot of steam outside of the crypto space. People are just playing it, right? People have no exposure to crypto. Young adults, teenagers, the youth are playing, Off the Grid, and they haven't the NFT marketplace side, the blockchain side, the gun token, that hasn't went live yet, but the game is playable. And so, I guess you could say this game is on beta. Anyways, we're expecting once because of the amount of users that are playing the game, we're expecting once the marketplace goes live that there's going to be a massive surge of transactions. And we know what happens when you get a massive surge in transactions on a chain. Look no further than than Solana or Sui or
ICP.
ICP. The Ton Coin is a really great example of, just a lot of users being onboarded and using the network. So in a scenario where all eyes and spotlight is on Avalanche and we see a price movement, we'd say to the upside expected if you get a lot of transactions. What could people expect at an Avalanche if they got exposure to it now, and if they rode this thing through a bullish scenario like massive amount of transactions going into a bull market? I know it's outside the top 10. I was making bold predictions that it could crawl into the top 5. Am I dreaming here, or what is the Avalanche?
Dream bigger.
What is the Avalanche chart kind of speaking to you?
Ironically, this is actually one we covered recently, and I do now have some Avalanche. You guys know I'm pretty adverse to altcoins, so I own some. I picked up a decent spot position, and it's up a fair amount. So I've been watching this chart for a couple reasons. Again, back to the 3-month chart, the quarterly chart, I reference it all the time. High time frames are always key. You've got a very key low that came in Q1 of this year. You can see that it has been defended on a closing basis for 2 quarters in a row, and it's attempting to do so again. So to me, that is a good sign. It's a swing fail setup. So as a trader, I look at that as I can now identify, invalidation and risk and want to trade this asset, and it's got good upside. Now, I'm not saying it's going to go to the moon or anything like that, like all-time highs, but what I will say is from these areas, you've got, whether it's hype, whether it's not from this region, you're looking at things like potentially 40-50% moves. And to me, those are very good moves, because those are things you can do with no leverage. And that's amazing. Like, you don't get that opportunity much in other spaces, even in Bitcoin. It takes a long time. So for me, when you look at it, you'll notice that you have a monthly SFP here at the low to kind of back up the quarter. So we had our high time frame level here. If we zoom in just a little more to the monthly, which is still a decent time frame, you'll see that your overall gold pocket from this wick low to the high here of September comes in right there on the back test of your SFP level, which comes across as your defended low. So as long as you're holding 27.24, pressure is on to try to take some of these old monthly highs, potentially come up to $36 to $39. But if it retraced from here, as long as nothing too detrimental in the space is happening, I would look at this as an opportunity, if a good reaction occurs, to take a position around $22 because it's just got the confluence. It's got everything I need. It doesn't mean I'll blindly buy the area, but I would certainly consider it, and that would be the only trade I'm looking at if price revisited there. So for me, I already have a position, and I am looking to see if it can't take advantage of something like an SFP setup to get up to like basically your 2024 open. And if you look at this from a higher time frame, before I hop off of it, that's what you want to see. You want to see this yearly open reclaimed, especially in Q4 here, because then this is a green yearly candle, and this sweep of the prior year high doesn't look nearly as bad. But the moment you do give up those levels we just spoke about, whether it's the quarterly or the monthly SFP on meaningful timeframes, meaning we start closing monthly candles down in this region below here, you're probably going to get that full yearly retrace down into this like $11 and $10 range, which isn't as fun to say, but the setup right now is bullish. You just need to understand the ramifications if that setup doesn't play out, so that you justify risk accordingly. That's it.
Awesome, brother. Magic, always love having you on the show, man. Always great insight. Guys, we're going to prompt Magic's Discord. Recommend you go join it, the Crypto Hub. He joins us every Tuesday. Magic, thank you, brother. We'll see you next week.
See you guys.
Thank you.
Take care. All right. Man, I'm excited. Magic, amazing. We also have one of my favorite guests joining us. Mark and I had a exclusive conversation that'll be featured in our almanac, and people that buy it will get the full version of it. We talked about a lot of things. We talked about why has Bitcoin's price been going down, what to expect in 2025, what are some advice and tips that Mark would give to you for year 2025. And we have Mark joining us live on the show today. Mark, welcome back. How are you doing, my friend?
Hey, guys. How you doing? Great to see you.
We're great.
Thanks for a nice intro.
Yeah, of course, man. We love having you on. Mark, I talked yesterday, and I was kind of going crazy over here. I was like, look, there's so many different factors that are like signals that are popping up, right? Gold is up, but yields are also up. And then inflation's going down, but Oil prices are falling and the dollar's getting. So there's a lot of mixed macroeconomic signals.
Yeah.
And I just want to share this post here from the Kobayashi letter. Bonds are falling like the Fed is raising rates again. Gold is rising like the Fed is aggressively cutting rates. Oil prices are falling while we're entering a recession. Stocks are rising like the bull market just started. Home prices are rising. Mortgage rates are rising like the economy is getting strong. And at the end, he says, did the Fed break the market? What are your thoughts?
Also, you got silver just broke 12-year all-time highs. Gold is an all-time highs. And
Commodities are making all-time highs. And I think a lot of people, Mark, are sitting here and saying, well, Bitcoin, we talk about it being a commodity all the time and hedge against inflation. Paul Tudor Jones, just on Squawk Box. What do you make of the current landscape of just macro and how that maybe can bleed into
also one last thing, to just the cherry on top. Today's show is dollar versus crypto. So today's kind of theme is, hey, for those of you that might be holding capital on the side, maybe that traditional mentality where you have $100,000 or $200,000 in savings for long-term retirement. Yeah, I mean, what do you think about all these flashing signals and kind of just the dollar in general in the direction of the U.S. economy and global economy, and what crypto means and how is it going to be disruptive?
So, I mean, lots of questions there, all good. So, no, the Fed didn't break anything. It's an election year. Like, I don't know why people are surprised by any of the things that you just kind of went down the list in the Kobayashi letter, and they're great. I mean, I love these guys. But of course, housing prices are going to rise because it's an election year. Of course, oil prices are going to fall because it's an election year. Of course, the stock market is going to get juiced just before the election. None of these things are incongruous. They're incongruous when you think about, well, rates rising, rates falling. Yes. I mean, oil's not falling because we're going in a recession. I don't know if you've been to a restaurant lately or been on an airplane. Airplanes are packed, restaurants are packed, people are spending, people are feeling good, employment numbers are still good. So there's no recession. Oil prices are falling because there's a perfect inverse relationship between presidential popularity and oil price, or gasoline prices to be specific. So you got to have gas sub $3 at the pump for the Democrats to have any chance. I mean, I think she has no chance anyway, but I think for her to have any chance, you got to have gasoline prices plummeting. You got to have housing prices rising. You got to have, Nvidia stock at all-time highs. And so all of those things are going to be engineered at least for another 3 weeks. Now, post that 3-week period, we go back to the main question, the dollar versus crypto, or dollar versus Bitcoin. So what people don't seem to snap, which I don't really understand because it's not that complicated, one Bitcoin is one Bitcoin. The genius of Bitcoin is that it is the same, and it will always be the same. It's hard-coded. It is encrypted. It is permanent, immutable, and we know the supply and demand we know the supply, not the demand. We know the supply for the next 140 years. So now, yes, could the majority of the people make a change to the code and vote for it? Yeah, they actually could. Very unlikely, but for reasons we don't need to talk about. But what people don't seem to snap to is we don't price Bitcoin in Bitcoin. Right? We don't say one Bitcoin is one Bitcoin.
Right.
We say one Bitcoin is $67,000, $67,400, or however many yen, or euros, or bolivars, or Argentinian pesos. And so what's happening? Bitcoin prices on September 6th, and I remember that day specifically because I was jumping on an airplane to the Middle East, troughed at 53,000. and everybody said we were going to 20, and the bull market was over, and everything was going to be a shit. I think that's just about the same time as the Fed did cut rates by 50 basis points, and now we're at 67,400, and we're probably just on the verge of a breakout out of a very, very nice cup and handle pattern that would take us to the 6 digits by the end of the year. So anyway.
Just to give the viewer a little visual here, Mark, this is what he's talking about, guys. This is a cup and handle on the weekly for BTC. And, that if you measure the depth of this cup, we should see, and, I'll kind of draw a trend line and move it above, depending on where this handle breaks out. Let's say it broke out from the bottom here. You're looking at a $107,000, $108,000 Bitcoin. And this is on a very high time frame.
This is an amazing pattern. It's an amazing consolidation. I mean, prices consolidated from February until 4 weeks ago. And we were actually in a little bit of a distributive pattern. I mean, I actually didn't really like it. We made a series of 5 lower lows and 5 lower highs up until, a month ago. Now we've made 2 higher highs and 2 higher lows. So I believe we've broken that distributive pattern, and we're about to break. If we go above 68, I think it's 68.7, 68,690. All bets are off. I mean, it'll be off to the races, and the shorts will get squeezed. And
you're pretty plugged into the charts there. Quite impressed.
Oh, look, I mean, charts. Everyone says that technical analysis is voodoo, and it's just lines on a piece of paper. It's just ridiculous, right?
Yeah.
Markets are made up of human beings.
Amen.
Well, that's not 100%. Most markets. Now, I will argue that the stock market technical analysis is less good because of the high frequency trading. The high frequency trading corrupts the human emotion. Humans are always going to human. And we do 2 things extremely well. We buy what we wish we would have bought. So we're always chasing that hot dot, and we push momentum further than it should. And then we sell what we're about to need, right? Investing the only business in the world, literally, when things go on sale, people run out of the store. Every other business, you put something on sale, people run into the store. Like we're coming up on Black Friday, right? People will run over each other. Yeah. They will bludgeon each other to get the latest, electronic gadget for, $100 off. But you take Bitcoin down 15% and they run away and say it's going to zero.
Isn't that crazy?
It's crazy. It's really so.
I think this Black Friday you might find groceries on a massive discount.
Yeah.
They incentivize people to go in and buy some cereal.
No, it's a great point. I mean, look, sales appeal to the core human nature that we have, right? We all like deals. We all like to get something for nothing or to get something for below its fair value. One of the challenges with crypto, most people don't know what the value is because they don't understand the difference between a network and a company, right? Everybody can say, okay, if I have a company and it does $1 revenue and it has 70 cents of expenses, it makes 30 cents of profit, it pays some taxes, and then the rest goes to shareholders, and I can do a discounted stream of cash flows, and I come up with a value. Now, that value is dependent on interest rates and discount rates and my ability to forecast future growth, and all that's debatable, but still, I can do that math. Networks are valued similarly, right? We have a rule, Metcalfe's law, and we can take the number of participants in any network, and we can take the growth of a network, and we can take the transaction value if there's transactions on a network, And we can calculate a value. The problem is the price is different than the value. And that's true of all assets. The price that we see is simply the amount that two people will buy or sell or exchange a small amount of a good or service. It has nothing to do with the value, right? It is simply a transaction between two people, one that needs liquidity and one that thinks they're buying something, below fair value, or that's an investor. Investors buy things below fair value. Traders don't give a shit, about fair value. They just need movement up or down, and they want to scalp. Speculators really don't care about value. They're just taking the opposite side of hedgers. Well, what's a hedger? A hedger is someone who produces something, oil, wheat, corn, Bitcoin, and has to sell their production forward, usually in the futures market, in exchange to pay their bills. And so they're hedging, they're selling future production. And so the speculator just takes the other side. They don't really care. They're just providing a liquidity tool and they hope it goes up. And then you got gamblers, right? Gamblers are people who buy meme coins and other stuff where there literally is no value. And if it's, you're monetizing attention. I'm like, okay, great. That sounds great. But no, you're gambling. And it's a little bit different than pure gambling. Like if you go to Vegas, you guys live in the home of it, and you go into the house. Well, the house always wins. That's because the games are rigged in the house's favor.
Correct.
So you go for entertainment value, but your expected return is negative. That doesn't mean no one can ever win. It does happen. It's a little different than, say, a slot machine or a lottery ticket. I had this conversation this morning with a guy. We were talking about memes, and he says, it's just a lottery. I'm like, well, no. A lottery is actually a reverse tax on the poor, right? It's a regressive tax on poor people because they're the ones that buy the lottery tickets with the expectation they're going to win. And only one person wins the lottery, not everybody. With a meme, in theory, everybody that bought the ticket now has something that's worth more than their ticket, right?
Right. Yeah.
But here's the problem. It's only worth that if you can convert it back to something of value. Like you can't use your Dogecoin to buy anything. You can't use your SPX 6900 to buy anything. You got to convert it back to dollars or Bitcoin or something. So if you convert back into a spendable currency, then you are realizing a profit and you won the lottery. I use Doge as the example, right? Mark Cuban and Elon own the vast majority. I don't know what the exact number is, but the vast majority of those particular tokens. If either one of them were to ever begin to sell, how fast and how far that asset would disappear, incomprehensible. I mean, people would panic. There would be a literal run on the bank, and the price, I don't know if it would go to zero, but it could. And that doesn't mean it has to happen. And in some of the memes where it's been a little more free and fair, meaning there wasn't a big VC airdrop or a big, pre-mine, like dog go to the moon, the rune. That was fair. Everyone kind of got the same for being there early. I own a couple, and I'm not pumping it, but I believe that was at least the right way to do it, where everybody had the same chance to get it if you participated in the pre-launch activity, and you couldn't buy your way in to get more. You couldn't be a big whale and influence it. That's it. But the same problem.
Right.
If we all tried to get out, the value goes down a lot.
Yeah. Mark, before I move on from this conversation, I'm curious, do you dabble in meme coins at all?
A little. I'm boring in most of my investing.
I've seen your socks.
Put money in my funds.
I'd call you boring.
No. Well, I mean, in the sense of like, I put money in my funds. I think my funds may do some interesting things. I mean, we do Bitcoin and we do venture capital in the digital ecosystem, and we own Solana and I think so. Maybe that's not boring, but so I put money in my funds, and that's where the bulk of my money is because that's what the SEC makes me do. I'm a registered investment advisor. I'm not allowed to really trade on the side, so I don't do that. I am allowed to have a personal account and I can do some little things on. So I said, I own some runes and I own some ordinals and I own, I don't own any of the memes, much to the chagrin of my I guess he is my partner. I mean, we were originally active partners with me and Pomp and Jason started Morgan Creek Digital, and now they've kind of gone to do other stuff. And I have 2 new partners. But they're still venture partners, so we still talk every Monday. We still act. And Jason's been busting on me. I mean, he's Mr. Meme Coin, and so he's like, oh, "I can't believe you don't have a bag of Retardio. I can't believe you don't have GigaChat."
Are you
Yeah,
checking? Are you checking the prices of these cryptos at 3 a.m. before you go to bed because you can't sleep?
No.
Damn.
I'm
the only one in this room?
I'm super boring. I buy things, I put them in a wallet or cold storage, and I go do other stuff. Yeah. And so somewhere in my series of wallets, I have a bunch of things that I've accumulated over time. But yeah, I don't stress about now. I'm also not a trader. I actually am not very good at trading. I mean, I've tried in the past, and because to be a trader, you have to really do it, right? You have to focus on it.
Yeah.
You can't do it part-time. You can't do it halfway. And unfortunately, that's what most people do. That's why most people stink. But people who really do it, even those people, it's a very small percentage that are good. Because trading inherently is hard as a human. Again, humans, we're overly emotional. We have all these cognitive biases. We think we're smarter than we really are. We think we're more experienced than we really are. We think we're more disciplined than we really are. So it's really hard to overcome the human biases that make most traders really bad at it. Again, it doesn't mean there aren't great traders. There are. Very small number.
Yeah.
And I always say it's kind of like, history's written by the winners. We all know the Apple story started in the garage and yada, yada, yada. Yeah. But there were 99-ish, whatever the number is, other companies that started in garages in Palo Alto that went out of business, and you never hear from them again. And there are lots, and I won't name names, but I know lots of people who've tried to become crypto traders and lost everything.
Yep. I know.
In fact,
as well.
When I first started down this path, we were originally fund of funds in hedge funds and private and venture. And so I was going to do a fund of funds in crypto. So I went out and I talked to pretty much all of the fund managers, because there weren't that many. I mean, I could count them on not 2 hands, but there were sub 50. And only 4 were bigger than $20 million. And this is not that long ago, right? This is 2016, 15, 16. So there were only 4 that were bigger than 20 million. And there were a whole bunch, like dozens, where some guy, and it was mostly a guy, very few girls in this business, but it was mostly guys, that they literally had bought some drugs on Silk Road and they had a couple Bitcoin, and it was at pennies, and it went up a lot. And so on paper, they had $1 million. And a bunch of their friends were like, hey, do that for us. So they put real money in, like real millions of dollars, and they got to 5 million. And then 2017 happened, and it went down 90%. And so they called themselves a hedge fund, but there was no hedge and there was no fund.
There's no hedge or fund. That's funny. Mark, when we had our discussion a few weeks ago, I think you so eloquently explained exactly what has happened to the price of Bitcoin. We always talk about, hey, this cycle is different, but this cycle kind of was different. We hit an all-time high prior to the halving, and then it's just been a slow grind downwards, as you said. Can you maybe explain to the viewer listening? Maybe this is someone's first cycle. They're like, hey,
Yep.
the halving, what's going on? Everyone's so bullish on it. The price is supposed to go up. What's been happening? The ETFs are supposed to bring all this money in, but we're seeing more, as you mentioned again, more of a slow grind
Both of
downward.
those things happened, and it's two phenomena that are different. Now the cycle's the same, so it's not different this time, but there are two things that make this cycle elongated, perhaps, or directionally different in the short run. And here's what I'm talking about. So the first is in the previous halving events, and this was the mad genius of Bitcoin, right? It's hard coded that the block rewards, the rewards paid to miners to secure the network, get cut in half every 4 years. Now, why is that mad genius? Because it guarantees that the price will rise. Well, why does that matter? And why does it guarantee? Well, I'll come back to that. The reason that matters is, again, humans, particularly guys, because we're hunter-gatherers. Like a few minutes ago, somebody walked down the hall and my eyes followed them because the eye follows movement. I tell the story of all the time. My wife says, get the ketchup. I open the door of the refrigerator. Honey, there's no ketchup. She walks up, grabs the ketchup bottle. If it ain't moving, I can't see it because I am a hunter-gatherer. So we like movement. So why does the halving mean there'll be movement? Well, think about it. If you got all the miners, their costs are fixed. They're getting a certain number of block rewards and they have a certain profitability. If your block rewards get suddenly cut in half, your expenses stay the same. So now most of those miners would go out of business. Well, that's not what happens. The price rises because they're the ones that have to sell. Remember, they're the hedgers. They need to sell the coins to pay for their expenses. Well, they're not willing to sell them at a low price, so they hold them longer until somebody bids a higher price, and so it causes the price to rise. And on average, it's risen about 100%, which makes sense. If you cut by 50, you have to go up 100. Perfect. Well, this time, it started down that path, but then what happened is runes and ordinals were creating a reusage of empty block space. And in doing these inscriptions, you had to pay the miners transaction fees. Well, if my block rewards go down, normally I wouldn't sell unless I get a higher price, but now I'm getting these transaction fees, and in some cases they're really pretty high. Then I'm okay to sell the mined Bitcoin at a lower price because I've made up for some of it with transaction fees. So that meant we didn't have as much of a dramatic rise right after post-halving. But the real reason is ETFs were launched and new money has come in, not as much as people think, because what happens with these ETFs, and it happened with GLD and others, is arbitrage. So there are these gigantic firms. So like when they say this big hedge fund has 2 billion of the ETF, well, yeah, they do, but they're also short 2 billion of futures against it because they don't take directional risk. They are net zero. So if they're long IBM, they're going to be short Honeywell, or they're, long Cisco, they're going to be short, PayPal or whatever. So they don't take directional risk. They have equal dollars long and short. And in commodities, what they do is they go long the commodity like GLD, and then they short the gold future. So if you look when GLD came, everyone said, oh, the price is going to go up because there's going to be all this demand for gold. There was, but the price actually drifted down for 9 months because the futures get short. And I talked about this on January 10th, that everyone was talking about the approval of the ETFs, but no one was talking about the CME very quietly increasing the number of futures contracts that were going to be available at the behest of BlackRock. Because BlackRock, yes, they bought $300 million worth of the ETF on behalf of their clients, but some of those clients are selling at least an equal amount, in some cases even more, because they're doing something called spoofing, which is they're intentionally trying to lower the price so they can accumulate at a higher price. This is one of the dirtiest little secrets on Wall Street, right? If you know you want to buy a bunch of stuff, do you announce to the world that you want to buy? Hell to the no, because then what's going to happen? Everybody's going to raise the price. Say, oh, you can buy from me at a higher price. So what do? You say, I hate this asset. In fact, I'm short this asset. So then everybody panics and the price goes down. And what do? You just accumulate.
Is that what
and
we
so
saw
you see
out of JP Morgan? And I don't know, that was kind of their playbook.
Oh my God, JP Morgan's been doing this in gold forever. And here's what I love. So 2 years ago, they got caught because you're not allowed to naked short. That's against the law. That's bad. But they do it all the time. And it's part of this spoofing, because in spoofing, not only do you naked short and mismatch your order book, but you also send out fake orders, like using your proprietary computer system. You send out fake orders to paint the tape so it looks like there's a lot of demand or supply, and it's all fake. So it's called spoofing. And they got caught, as they should. And they got fined, and they paid the fine without admitting guilt. I always love that part. How do you pay $1 billion, $960 million, and not admit guilt? Isn't the act of paying $1 billion an admission of guilt? Right. But no, you get to say not admitting guilt. And when they asked the guy, isn't that bad? He says, well, we made 20 billion. So we paid 1. That's like 5%. That's like the cost of doing business. I would take that trade all day.
Everyone would.
100 times out of 100. And so that's what's going on. And that's why I say the series of lower highs and lower lows was being caused by this relentless selling of the futures. And when it broke 3-4 weeks ago, and now we've had 2 higher lows and 2 higher lows and 2 higher highs, I think that pattern is broken. And I won't say definitively we're done, but transaction fees have dropped because there's not as much activity in runes and ordinals. And so the miners aren't going to sell as much. And miner inventories are really skinny, so they need a higher price to cover their expenses. So I think they're going to hold a little longer. And the transaction fees are dropping. And and we're coming up to, the boom time in crypto, which is Thanksgiving week, right? Which is where this year will actually be welcome, right? The last 2 years, we were like, you can come, but don't talk.
Right.
You can eat, but then leave. So now it's going to be, come and tell us about Bitcoin again. We love you. You're part of the family again. I think this could be the best Thanksgiving ever, right? I would not be surprised to see us run, because I think we're going to get a positive election for Bitcoin. I don't know if it's going to be a positive election, but I think it's going to be positive for Bitcoin. I think orange man, orange coin, right? So I think that happens. And that will be a positive. But more importantly, all the people talking at Thanksgiving, I could see us make that measured move that you so eloquently drew. That could happen really fast. And if we break 6 figures, the move from that 107 number to the crazy, like 140, 150, that could happen really fast. And then the bear market starts.
Yeah, I've always been the crazy one at the Thanksgiving Day table. And you know what? Over the last couple years, I am less and less crazy. And they're engaging in conversation with me, because before it was, well, nothing backs, what nothing backs is a Bitcoin. I'm like, $1's the same, man. I'm like, nothing backs that thing. And Now, inflation's hitting hard.
It's such a great point because 2 years ago, 3 years ago, 4 years ago, 5 years ago, no one knew anything about this. And to your point, all they heard was people, like the Donald originally said, there's nothing backing it. I'm like, you mean different than if I take out a $20 bill, which I actually don't carry anymore. I don't have cash anymore. But if I took out a $20 bill, if I handed it to the government, would they give me anything? No. In the old days, they'd give me gold or silver. We used to actually, be exchangeable for gold or silver.
I heard they're giving out high fives.
That's gone. They won't even give you. I mean, maybe you get a high five if you just gave it to them for free, but you don't get a share of tax revenue. You don't get any special treatment. For $20 and a smile, you can still buy a cup of coffee at Starbucks. Ha ha ha. But there's nothing behind any currency except belief and custom. Right? We use green pieces of paper. Israel uses yellow pieces of paper. China uses red pieces of paper. In Europe, they use plastic. So it's surprising.
I was going to say the surprising thing is that people are waking up to what is behind the fiat system. Though I feel like in my early days of getting into crypto, if you said anything negative about the dollar currency and you try to prop up Bitcoin as a remedy, it was you were scoffed at and laughed at. And now people, they might not get exposure to Bitcoin, but at least they see the fundamental problem of fiat and they're openly discussing it. And so that's kind of the narrative change at the table at my family is the fact that people that defended the dollar and its great position in the global macro sense, but now it's not that. The conversations is changing and people are upset at where we're going.
Such a great point. I think it's a really, really important point. And it's a little bit of the frog being boiled in the pot, right? If you drop a frog in hot water, it will jump out, right? If you put a frog in cold water and slowly turn up the heat, at some point it'll get paralyzed. And then when it's too hot, it won't be able to jump out and it will boil. And from 1776, when the Republic started, right? We're not a democracy, we're a republic, by the way. But from 1776 to 1913, a dollar was worth $1. And had a little bit of fluctuation around two big wars, but $1 is worth $1. There was no such thing as inflation. There was no fiat currency. Everything was backed by gold. And basically what happened is World War I occurred, and you had this debacle in Germany, and they lost the peg, and they were ordered to pay all these reparations, and they abandoned, and you had the Weimar hyperinflation, and people saw for the first time, whoa, wait a minute, I mean, the government can just print money for nothing, and look, if you have $1 million here, and you print another million. Well, what just happened to the value of the currency? Well, it just got cut in half. Well, if you had $1 million and you print 10 million, you just got cut by 90%. So 89%. So that finally hit. And from 1913 until 1971, it was the boiling frog. It was a little bit of inflation every year. And it didn't really feel that different. When I was born in 1963, the hospital bill for my mom was like literally $24 or something. And when my daughter had a baby a couple of years ago, the bill was like $8,000 or something like that. So but it was the same thing. It was the same transaction. Woman goes in, leaves with a baby. I mean, same transaction. And in fact, my mom stayed in for like 3 days and my daughter was out in like less than 24 hours. So babies, it's not even the same transaction. So inflation is real. And I think what's happened since 71 is that rate of inflation has accelerated. And in the last 4 years, since, look, the lockdowns, and we don't have time to go into all of this, but the lockdowns were engineered to test our willingness to comply with craziness, right? That's what the lockdowns were designed to do. and everything from, the injections to all vaccine passports to all this crazy stuff. But the biggest thing that they did under the cover of darkness and under the guise of the pandemic was the cult of Kelton, Stephanie Kelton, this MMTer, and the current administration basically authorizing the creation of 50% of all the money in the history of the republic. Right? We've been a republic for 248 years, 244 years, 10 trillion, 4 years, 10 trillion.
That's crazy.
So it is crazy. I mean, it's crazy because $1 trillion is a number that the average person can't comprehend. Like, we'd have to stay here and do this show together for 31,710 years.
I'm
which
game,
would be
Mark. I'm
reasonable.
game. It's a chart here is the M2
Yeah.
money supply there, which, as you alluded to, has been a slow grind up through the 70s, and
And then it looks like
here,
a SpaceX rocket.
here at 2020, we dramatically.
Oh, no,
increased.
it's absolute lunacy and insanity. But if you spent $1 a second for 31,710 years, that's $1 trillion. So 10 of these babies. And so what's happened now is the rich are like, bring it. Love this. My real estate's up. My stocks are up. Nvidia's at all-time high. I love this. The average person, or worse, the poor, fucked. They're totally fucked.
Yeah.
Right? Their income went away because interest rates were pushed to zero. They don't own any assets. They don't own their house. They don't own stocks. They don't own stuff. Their rents are rising like crazy. Food prices have gone crazy. And so it is a stealth wealth tax. Inflation is a stealth wealth tax, and it steals from the masses and gives to the rich. And I never understood how those politicians could stay in place, right? How did Uncle Bob get reelected in Zimbabwe, right? He stole everybody's money and gave it to all his friends and inflated. And, I have on my desk over there a 100 trillion Zimbabwe dollar bill that wouldn't buy a loaf of bread. So he impoverished a nation, but he still got elected. How? Because he gave people free stuff. Argentina, right? Third most powerful country in the world, turn of the century. Now they're a third world country. How does she get elected, right? How did Eva Peron get elected? She gave away free stuff, right? They give away free electricity. How does Maduro stay in power in Venezuela? He gives away free gasoline. How do the current administrations think they're going to get elected? They give away free stuff.
Nothing's free, though.
They're impoverishing the masses. They're making their cronies, the rich, really rich. But look at the big donors to the current administration, right? It's not poor people. It's the rich people.
And then
they know how to play this game. And I'd be saying the same thing if the Republicans were in, because I don't think there are left and right anymore. I think there's in and out. When you're in, you do all the bad stuff. And when you're out, you do whatever it takes to get in so you can do all the bad stuff. Because being in is very lucrative. Like AOC had a negative net worth before she went in. Now she's got, double-digit millions. Nancy Pelosi had no net worth. Now she's got, hundreds of millions.
She's a good trader. She's a very
Her
good
husband's
trader.
a good trader, actually.
She is a very astute trader. Because it's actually pretty good business to be a trader where you control the legislation that decides whether he wins or loses.
thought?
I mean, that's
Then just to piggyback off, with the current administration, going up for reelection, they're handing out that money. You have the $50,000 for first time business startups, $20,000 for first time home buyer, and then the buck doesn't even stop there. You got perhaps a continuation
student loan forgiveness. Look, they are buying votes left and right, and I said it really well. I shouldn't say it. Here's the problem. I'll open up Pandora's box for everybody who wants to go down this rabbit hole this weekend.
Let's go.
So I watched a speech by Vladimir Putin. It was in Russian, so I didn't understand it. So I was relying on the interpreter. But I figure if the interpreter was saying it wrong, the internet would have blown it up and said, no, what he really said is this, right? So I'm assuming that the interpreter was interpreting the right way. And he basically said, I don't understand why you're all confused by this, right? Why are you confused about this attack on family values? Why are you confused about this confusion on the genders? Why are you confused about this handing out free money to the masses? This is not new. This is the 1910 Bolshevik playbook. This is how the Bolsheviks came to power and got in power. And I went back and I did the work, and it's like, oh my God, LGBTQ is not new. Like, that's not a new thing. It was going on in 1910. And this assault on gender and this assault on family values was all there. I'm like, I mean, literally my mind was blown. And the way you win is through dividing and conquering, right? Well, how do you divide? You divide people on basic core values. And if you look at what's happening, it's scary stuff. So, I don't think the Donald's going to fix it. I think it'll just stop the negative pace of the badness because he has another agenda. Right. Donald wants to make Donald rich. That's why he wants to be president.
At least at face value, it seems like, he's trying to fight against that woke movement. And, as you were saying, this gender identification. And so I did want to say that when it comes to Donald Harris, I know you discussed it earlier about the probabilities of winning, but Poly Market, which has been a good go-to here, 65%. And this is, the on-chain betting through Ethereum.
Yeah. I did see an interesting thing about this that I don't like this kind of stuff because it creates a complacency where someone looks at that and says, well, I don't need to vote.
I agree.
I'm like, no, everyone needs to vote. You need to vote. Everyone needs to vote. You need your voice to be heard. In fact, to me, you shouldn't be able to get a driver's license unless you vote. Like, it should be your civic obligation. I don't want to choose.
You can vote without the license. You can vote without the license now in California.
Well, there's that too. There's that problem. But everyone should have to vote, right? And I don't care if you have to pick between two evils or the lesser of two evils. I don't care. Pick one. It's your job. So what I don't like about those stats is they make people complacent and they're like, well, I don't need to vote. No, you do, because that stat is just like the old saying, figures lie and liars figure. Those markets are dominated by small bettors. The big money is actually on blue right now. And the little money, which dominates, is on red. And they don't dollar weight the numbers. So I'm just saying, people, don't be complacent. If you have a view, and and the funny thing is, I'm probably lifelong. I mean, I'm registered independent, but I'm probably lifelong more bluish than reddish. But we got to stop what's going on. I mean, what's going on right now is not what either party's ideals were set up originally. Yeah. We've gone to a place that's very, very dangerous. And it's when capitalism moves to cronyism. And that's where we are right now. And we need to root it out. And look, remember when Donald said the first time he was going to drain the swamp? And all he did is put a bunch of baby alligators in with the big alligators, and now we got lots more alligators. So he started breeding. The swamp a little more equal. So again, I don't think he's like some great person who's going to do all these great things, but I do think he doesn't buy into this ideological problem, as I see it, that I want no part of. And so I don't identify with any of what's going on. I don't care what they call themselves. That's bad. And I long for Reagan or Clinton. I don't care which one. Give me the person who runs on the edge, but governs from the middle. That's what I want, because that's how you win. When you run on the edge and you stay on the edge and then even get further on the edge to, appease the masses, that's where we end up in the shit show we're in now, where there was the stat yesterday. If you confiscated all of the wealth of the billionaires, forget taxing the billionaires, if you confiscated all of their wealth, it would fund the government for 8 months.
That's insane.
So
that
it's
is
not the wealth of billionaires. It's the government spending, because, look, I'm probably not the biggest. I'm not an Elon sycophant. I'm probably not even a fan per se. I'm not a hater, but I'm not a fan. But I do agree with his Doge thing, the Department of Government Efficiency.
Government efficiency, yeah.
I am 100% on board, right? That the chart that just, it makes my skin crawl is you look at student enrollment over time is a nice stable 3, 4, 5%. Administration is like 100% compound average. So is our school system for educating our kids or a full employment act for adults? Seems like more the latter. And so I don't know if he really fired 90% of the people at Twitter. I don't really know or have any insight. All I know is Twitter works. I love it. I'm never going to call it X, by the way, but Twitter is awesome.
So hard.
And all my relationships that I have all over the world are from Twitter. And I know he definitely fired some number of people. I don't know what the percentage was, but you could probably get rid of a whole bunch of inefficiency in government and make it work a lot better. Now, are we ever going to go back to what we originally had, which was, it was a 2-year voluntary service, right? You left the farm, you went for 2 years, and then you went back and ran the farm. You had no lifelong career politicians. And I'll just leave you with this last thought, right? We need term limits. That would be first. That would be the first fix, because it's impossible to attain an office for the average person.
Yes.
Right? Because to be a senator, and I don't have the number for congressman, but to be a senator costs $100 million to win a senatorial race. The average person does not have $100 million, right? Meg Whitman tried. She spent 103 of her own money and lost, unfortunately. But most people don't have it. So what do? They have to raise it. Well, if you raise $100 million, I'm going to go on record and say you owe people stuff.
Yes. Yeah.
And so it's then not surprising that the laws that get passed favor certain special interests. And look, it's not shocking, or it shouldn't be shocking to anybody. On Friday, the CEO of Moderna was named the COVID czar. Right? Public citizen, not elected official, public citizen on Friday is named the COVID czar. And on Monday, his company from the Rose Garden at the White House, okay, this is one of the things that Donald did that I didn't really like. Maybe, again, it wasn't Donald, but whoever it was. But from the Rose Garden announces that Moderna is going to be sponsored by the government to give the shots. That's not a coincidence, right? And he was one of the largest donors to the campaign. So those are not coincidences. Those are not, and you can't run anything effectively or efficiently in that type of system. So you got to cleanse that, which I think is possible. But the first thing you do, start with term limits. Then we could do some stuff like no insider trading, shocking as that might be, that they have to.
But how are they going to become millionaires, Mark? How are they going to become millionaires? How are they going to become millionaires?
I tell you what, they'd have to do it the old fashioned way, innovate and create something, create good content.
Yeah.
So right.
Mark.
Guys, as always, great to chat.
Yeah.
And I will see you soon. I'll probably be out for a conference season this year in the winter, and we'll get together.
Yeah, man.
Come
Love
out
to go on a
for
drink.
Money 2020 next week. Come hang out with us.
Next week, yeah, can't do next week, but it'll probably be after the first of the year when it's it doesn't get very cold here in North Carolina, but it does get cold, and that's when I leave for your part of the world.
Come to Vegas. We will accept you with open arms. Mark, thank you so much. Thank you so much for joining us. We'll talk to you next time.
Thanks, guys. Be well.
Take care.
All right.
See ya.
Love having them on. It's one of my favorite guests on the show. Guys, hope you enjoyed today's show. If you're not subscribed, make sure you subscribe to the channel. Ping a notification bell. Also, we did do an ICP video yesterday. You should go definitely check that out. If you haven't done so, if you're watching us on X, follow us. We post a majority of our updates there. And with that being said, Rocco, thank you all so much for tuning in. And a big thank you to our two guests today, Magic Internet Money and Mark Yusko. We hope you enjoy the content, guys. Come back tomorrow. Same place, same time. We'll see you then. Peace. Ciao a tutti.
Sin City, crypto. Everybody know we here for entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in. For big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I split the game, but they gave it. Named according to your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy a dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming, hola, till my bags are flowing over. Hold ya to the moon, then to the solar. Won't I? Don't be letting FOMO control ya. It's over when the finger tornado close ya.